Today I wanted to talk to you about the capital gains tax exemptions that are potentially going to change should the Labor government get into power in the next coming weeks. So, to give you a quick brief, at the moment, as a property investor, if you hold a property for longer than 12 months, you're entitled to a 50% exemption on that capital gain when you sell that property. So I wanted to give you an example today of how that plays out if the policies are changed. Now, two things obviously have to happen for this to occur. Number one is the Labor government have to get into power. And number two, they need to pass that policy come the new year, which will take effect basically January 1, 2020. Now, a lot of people are talking about the negative gearing impact, but I think the capital gains tax exemption is also a really solid one that we need to forecast for as an investor going forward over the next 10 to 15 years. And I'll show you today just how much of an impact it potentially can have on you as an investor. So let's take a property that we bought for $500,000 at the moment. So we bought it next week and we sold it in 3 years' time for $1 million. We've had a great result. Now, we get that exemption if we've held the property longer than 12 months. So we've done that. So our profit is $500,000. Obviously there's agents fees and those sort of things, but let's say our profit for this example is $500,000. In the current position with the current policies in place, we get a 50% exemption. So we're actually paying tax on $250 of that $500,000. Now let's say our tax rate for this example is 37 cents or 37% is our taxable income rate. So let's do the maths on that. So 500,000 multiplied by 50% being the exemption is 250,000 times by 37%. Means that we'll pay about $92,000 in tax back to the Australian government. Right, so that's the current conditions under the policies as we speak. Fast forward to January 1, 2020, and all those things have taken place and the policy's been passed. The exemption is now 25% instead of 50%. So on that same example, the 500K profit, we're now paying tax on $375,000, not $250,000. How does that affect the same income earner on 37 cents in the dollar? Well, instead of paying $92,000 in tax, they're now paying $138,000 in tax for that same property. So that's nearly $50,000 that they're paying extra because they bought the property after January 1, 2020. It's a lot of money, right? If you had multiple properties, that number escalates pretty quickly. Now, obviously, there's a few indicators there, performance of the property, your taxable rate that you're on, etc., etc. But in that pure example, $50,000 is the difference. So, does that mean we go and rush out and buy a property right now? Well, the answer may be yes. If your ducks are in a row, your finances there, and your aim is to buy a property over the next 12 months, you need to think seriously about doing that before January 1, 2020 in the event that the Labor government does get in the next few weeks. Now, this isn't an ad for the Liberal government by any means. It's just simply a keen investor wanting to get the news out to fellow investors to potentially save themselves some money over the long term. So, in summary, if you think this is you and you'll be doing that in the next 12 months, regardless of what happens with the Australian government, it looks as though you need to send me a personal message and let's have a catch up.